What if I told you there is one company that is quietly taking the lead in the AI boom? While everyone is talking about Nvidia, there is another company that is building the data centers to power the AI boom itself. And that company is Applied Digital, ticker symbol APLD. Now, I'm sure you've all seen graphs like this and pictures like this showing just how big Nvidia has become and how Nvidia is powering the AI boom. Even this one, countries whose entire GDP is now less than Nvidia's market cap. It's insane really, but as much as AI is dependent on Nvidia, it is also dependent and even more so dependent on data centers. And this is where Applied Digital comes into the picture. And this stock is booming right now, up over 167% in the past year. But imagine you had Nvidia stock 10 years ago and thought that Nvidia was done once it had ran 160%. Think about just how early that really was. Now we've got a lot to get through in this video, so I will try to keep this intro short, but if you find any value in this, can I ask you to smash the like button? It takes a lot of time to make these videos, but it literally takes 2 seconds and costs nothing to smash the like button, and it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get into it. Applied Digital develops, builds, and operates next-generation data centers and cloud infrastructure in North America. Its data centers provide digital infrastructure solutions to high-performance computing industry. The company also provides artificial intelligence cloud services, high-performance computing data center, and crypto data center hosting services. The company's purpose-built facilities are engineered to unleash the power of accelerated computing and deliver secure, scalable, and sustainable digital hosting, along with software as a service and GPU as a service solutions. Backed by deep hyperscale expertise and a robust pipeline of available power, Applied Digital accommodates AI factories to support the world's most enacting AI, ML, blockchain, and high-performance computing workloads. Looking at the investor's presentation, we can see that Applied Digital have a world-class management team with decades of experience across industry-leading companies. The company has been positioning itself for huge growth over the past few years, and that has now ramped up with over $5 billion in funding agreements to support data center development. AI demand is increasing, and so too is the demand for power. The demand for power has capacity expected to triple in the next 5 years, with hundreds of billions of dollars being spent annually by the world's leading companies. So this week, Applied Digital released their earnings report. Now before I look at this, I just want to point out that I made a video just days before the earnings release when the stock was just $10.75. And I got slated on here by a few people when it dropped below $10 on Tuesday. But I didn't just make that video and hope for the best. I highlighted a possible breakout move that I thought seemed very likely on a good catalyst. And that catalyst being the earnings report, where I went through a very good article on Seeking Alpha. Applied Digital, a Q4 surprise, could be the spark for a multi-year breakout. And I highlighted that analysts didn't seem to be taking into account of the fact that revenue was going to be far higher than the previous quarter because the company had fixed its technical issues within the first 2 weeks of the quarter. But this could actually be just the start of the bull run. So let's take a look at the earnings report and then I'll look at a few more important details that you don't want to miss. So on Wednesday, Applied Digital released their fourth quarter and full year 2025 earnings report. So first, here are the main highlights. Revenue was $38 million, up 41% from the same period last year, and the net loss was $26 million, a huge 25% reduction on the same period last year. The net loss per share was down to 12 cents, down 57%, while the adjusted net loss was just 3 cents and EBITDA of $1 million. For the full year, revenue was $144 million, the net loss was $161 million. This loss is actually up 118% since last year, so we will need to look at that in a moment because that doesn't look good. But overall, adjusted EPS is a loss of 6 cents and adjusted EBITDA of $19.6 million for the year. Now, it would take me ages to go over this whole press release and the management commentary, so I have put a link to this in the description for anyone who wants to read this. I have also included a link to Seeking Alpha, where you can check out the latest Applied Digital reports from Seeking Alpha analysts, and using my referral link, you can get a free 7-day trial, so check that out. Anyways, before looking at the actual 10K filing, I just want to highlight one bit of management commentary from CEO Wes Cummins. We believe the future is very bright for Applied Digital. We've sought to build the strong relationships with nearly all major hyperscalers and demonstrate our advanced building capabilities by passing what we believe to be some of the most rigorous technical due diligence and processes imposed by them in the industry. As a result, we have established relationships with several hyperscalers, which should position us for future projects. So they have established relationships with several hyperscalers. Now, unless you've been living under a rock, then you would have seen that Applied Digital just announced signing 2 major lease agreements with Coreweave AI. These leases are to supply 250 megawatts of IT power to Coreweave at its Ellendale campus center. The lease covers about 15 years and has the potential to bring the company over $7 billion in revenue over this contract. But Coreweave also has an option to use another 150 megawatts in the future, making Ellendale a scalable center for growing AI and HPC needs. So with this in mind, this is just one partnership. Imagine if Applied Digital were able to get multiple of these agreements in place. For example, the Ellendale campus is designed with a potential to be scaled up to 1 gigawatt. The contract for 250 megawatts with Coreweave will bring about $7 billion over 15 years. Annualized, that would average $460 million per year in revenue. So a 1 gigawatt capacity, then it would be possible to see revenues of over $1.5 billion. Now, looking at the actual 10K and skipping right down to the balance sheet, we can see that Applied Digital have total assets of over $1.8 billion and total liabilities of $1.2 billion. The company's largest asset by far is property and equipment, which is $1.2 billion, but they also have cash of $41 million, which is more than 10 times what they had this time last year. And they have got another $72 million of restricted cash compared to just $21 million last year. In fact, total assets have increased, nearly tripled since last year, going from 760 up to 1.87 billion. But liabilities have also nearly doubled since last year, now at 1.2 billion, and this is largely thanks to long-term debt. And looking here at note 7, we can see that this long-term debt is largely made up of convertible notes that have a maturity in 2030 worth $450 million and a $375 million loan. Other than this long-term debt, the company's overall liabilities would be about the same as last year, coming in at about $600 million. Now, looking at the income statement, and this is important, we can see that Applied Digital's total revenue has been increasing each year, from $55 million in 2023 up to $144 million for 2025. But I mentioned a couple of minutes ago that their net loss had increased massively. We can see that here. From a loss of $149 million in 2024, they have a loss of $233 million in 2025. Now, this is a huge increase, but it is explainable. We can see here that importantly, the operating loss has been cut from $32 million in 2024 down to $16 million in 2025, but they have been hit by these two losses in particular: loss on conversion of debt and loss on change of fair value of debt. But when we look at the notes to the accounts, we can see that loss on conversion of debt was $33.6 million due to the difference in fair value compared to the price at which the notes were converted. And the loss on change of fair value of debt related to the change in fair value of the conversion option derivative of the convertible notes during a 2-week period in which we did not have sufficient authorized shares to settle such conversion fully in shares. Now, these are not normal operating losses. These are one-off expenses which did not happen in 2023 or 2024 and could well not happen in 2026 either. Looking at MarketBeat, we can see that the consensus price target for Applied Digital stock is $14.18. This is according to 13 Wall Street analysts who have Price targets as high as $20, with the lowest price target being only $7. But all analysts are in agreement because there are no sell ratings, there are no hold ratings, and 13 buy ratings, of which one analyst has given the stock a strong buy. And the latest of these analyst ratings were set this week just after earnings, where all three analysts have boosted their targets and reiterated their buy rating, with targets of $15, $16, and $18 set by Lake Street Capital analyst Rob Brown. Now, the very latest news for Applied Digital has just landed. Coreweave have signed on for the remaining 150 megawatts of capacity that they had an option for, meaning that the total lease is now valued at $11 billion over 15 years, or over $700 million per year on average. Now, this is a big deal because this is far more revenue than the company is recording so far. This is a huge jump in revenues year over year. And I want to take a look at one more important thing from their previous earnings report. When Applied Digital issued their Q3 earnings report a few months ago, the company recorded an operating loss of $28 million for the first 9 months. But by the end of Q4, this loss was only $16 million, meaning that Applied Digital was actually profitable in Q4 on their continuing operations. Their loss from discontinued operations, which they said in the year-end report is the cloud service business, and all figures have been retrospectively adjusted. So fiscal year 2026, which has already started for Applied Digital because their year-end is May 31st, fiscal year 2026 looks like it could be huge for APLD and could even be a profitable year. But guys, what do you think? Drop a comment below if you appreciate me looking a bit deeper into the financials, but remember that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Remember to like and subscribe, and I'll catch you in the next